All right, welcome everyone to the summer edition of our homebuyer webinar. And our topic today is one that has probably been the number one topic for the last 4 years. It is preparing to buy a home, but we're going to go a little bit different direction today. We're going to go much deeper in that topic. And I am excited to walk you through the agenda now. So certainly, my name is Dan Sugg. I am the Chief Mortgage Lending Officer here at Michigan First Mortgage, and we are a wholly owned division of Michigan First Credit Union, celebrating our 100th anniversary this year as a credit union. We're 8 years in our mortgage company, but 100 years at the credit union. Without further ado, let's meet our subject matter experts. Bob Eves. Bob and I have a long history together. And Bob, thank you for joining us today on the call. And number one, would you tell us what you offer to our members and certainly your experience in this business?
Yes, thank you, Dan. It's a pleasure to be on the call. I take a little different approach to getting our borrowers ready to prepare a home. A lot of this comes down to educating, making sure the borrower understands the who, what, why, where, when of the loan process. And then we try to work as a team with trusted realtors like Renee to get the borrower in the best position possible so they are successful and enjoy the home buying process.
Yeah, thanks, Bob. And I know I'm not going to make you tell me when you started this business, but certainly you have been in it as long as I have. And you've probably seen every cycle, I'm sure, in the economic related side to the mortgage business and real estate there is.
Yes,
Yeah.
I started in the early 80s, so you are correct. A lot of cyclical behavior over those years.
Yeah. Well, one thing that hasn't changed is the benefits of being prepared. And I'm really excited today to talk to Renee Brown. Renee is one of our managing broker partners. I love the title, Chief Encouragement Officer. I would love to hear more about that. But certainly, Renee, I know you're no stranger to our Homebuyer series here, but tell us a little bit about yourself and what you bring to our membership.
Okay, so hi everybody. I'm Renee Brown. I'm working on my 14th year. Slide says 13, but that's fine. I've worked with many first-time home buyers. As a matter of fact, I have first-time home buyers that send me their cousins, their friends, and I'm always telling them, hey, go to Michigan First. Call Bob, call Zareen. I'm always telling people that by law we can't. It's called steering if we send them one person. But even if they come with a mortgage person, I say, well, check these people out. But I've helped people buy single family homes, multifamily homes. But as a first time home buyer, it's one of the most exciting times for a person. And I jump right in there with the home buyer. When I take people out, I act like it's my house. So I enjoy it a lot. After all these time, I still enjoy taking first time home buyers out because it's a big step. So I really, really jump into the process, and I think communication is key when you're a first time home buyer.
Yeah. I don't know about we, but I certainly, when I talk to first time home buyers, I tell them this is a big deal. It is a privilege that everyone can earn and certainly prepare for, but it's not a right. Like it is a 30-year commitment to a institution to buy a home together as a mortgage company and a realtor and a first time home buyer. We're in this together to make sure everyone's successful and sustainable in that home ownership. So, well, let's jump right in. I would like to start really maybe with Bob and say, Bob, what's the mortgage market forecast? We had our sales call today with our sales team, and we talked about where rates are and where things are going. But from from your view, where do you see for our members where the mortgage market is as it relates to the economy and rates?
Great question. So, in talking to my borrowers, I think after going through the COVID rate scenario environment, to me, that was an artificial rate environment. Over the years I've been in the business. I remember my first wife and I bought our first house in 84 at 12 and 3/4. So I think historically, if we look at 30 years, rates in the mid sixes are good. We have found the longer you wait, based on what you say, based on rates, we've experienced home prices going up faster than you are able to save. So I always encourage my borrower, if we have the total scenario that we'll talk about, all facets of your financial picture, long-term goals, then I think rates, I convey to my borrowers on a daily basis, rates are good. Rates in the mid sixes, upper sixes are a good rate. If it is the right time to do that, we have no control over future rates. But if they were to drop, if we have that conversation that it makes sense for you to refinance, you can. Certainly don't have to. But I'm a firm believer. Rates right now, people say rates are high, and I preach I don't believe they are. These are historically normal rates. And if it's the right time to buy, you can get a rate in the mid sixes, or you can pay rent, which is 100% interest, and you're getting no equity. So I truly don't believe rates are bad. I think they're good and in a normal range.
Yeah. And as we preach all the time, that rate is just an indicator. There are many things that go into home affordability, but the most important question, especially a first-time home buyer can ask, is what's my payment? There are so many things that affect that today, from taxes and insurance and maybe private mortgage insurance, that have nothing to do with rate, that have nothing to do with how much money you're putting down. And the percentage of the payment is never been larger than taxes and insurance in the past. Tax and insurance make up almost 30% of the average payment today. And certainly that's the one you have to stroke the check for at the end of the month when you're paying your mortgage payment, is what is my payment? And I tell first-time homebuyers that's the more important question, certainly. So I think from a current perspective on rates, and I know we brushed on this a little bit earlier, I think consumer confidence plays into this a little bit also. We had our best app. I don't know. I was asking Renee before we started the call how her business was, but in June, we had our best application month we've had in 3.5 years. Now by quite a bit. So from a unit and a volume perspective, rates didn't drop for that to happen. What happened, I think, was the inventory, which we'll talk about the real estate market with Renee in a second, but the inventory's up. Certainly there are more sellers, that there's a more healthy market, in my opinion. And then the need started to outweigh the pain maybe of an increased payment. So we saw a lot of people come into the market and buy homes that maybe had been sitting on the fence thinking rates were going to drop. So, and there's certainly a lot of ways to mitigate some of that pain. If you're in a 3% mortgage today and the house that you want and you're dreaming about, you have to get it 6.5. But ultimately, the consumer started to feel used to maybe the concept that the rate is going to go up. So I think that was important to understand too. So Renee, we just heard from Bob from a rate kind of and now payment perspective. How are you feeling about the real estate market? You just told me you have a lot of listings. So what's driving that, and how are you feeling about the state of the market today?
So two things. I do have a lot of listings, and there are multiple offer situations, and we haven't seen that since COVID, but we're seeing a lot of multiple offer situations. I just got some bad news this morning. A person did not get an offer. They took another offer, and it was over asking price. I have, there are 15 of us on our team. We have one of my team members, she had multiple offers two of them had multiple offers last week on their properties. So multiple offer situations are happening, and it just means, hey, I'm putting in this best offer that my team, when I say team, my real estate agent, my mortgage professional has told me either I can afford it or I can afford to do more. I say don't try and as a buyer, listen to your professionals, because this market is, it's not a bad market, because like I said, I have multiple listings. I have people calling me a lot of times for probate properties, which takes a little longer, and we won't go into that. But I have people coming with cash. So if you come with cash, sometimes you definitely get outbidded on a property, but sometimes you still win.
Yeah.
So I had a client. I'm going to talk about this one client, and they may speak up. I think they had 14 offers, and they took a cash offer, but the cash offer fell through. So they got a property. They got the property. So don't be afraid as a buyer to come in as a backup offer. And I advise that all the time. And if I don't win the offer, I always tell the other agent, well, please circle back and let us know if we could be the backup offer, because things happen. As a first-time home buyer, I'm not a first-time home buyer, but I have experience. So listen to your real estate professionals, because if you're a first-time home buyer, you've never done this before.
Right.
But definitely listen to the professionals. And so often home buyers listen to family or friends who bought a house before. I say listen to your professionals.
There's if we can go back to the multiple offer situation, that's interesting to me. But do you see it more in like the perfect house that hit the market that a lot of people have been waiting for? Because I do see some houses sitting now that maybe they're not price corrected, or they're not updated as well. Do you see a difference, or is it like, oh, there's a dollhouse on the market and everybody's going to want that one?
Well, so it just depends. Houses from every range. I see. I have one sitting now. It's been sitting for 2 months. I told the seller it's overpriced. So finally last week he said, oh yeah, I think you're right. Because I mean, you can only do so many open houses. So many people are only going to want to see it. And again, it's overpriced. If it sits on the market too long, it's overpriced. But I also tell first-time home buyers, in that instance, there's negotiation power.
Yeah. Yeah. And we'll get into that certainly. So yeah, it's good to hear. Do you see more listings today? So, and I think you would probably agree that certainly is good for our market, especially for first-time home buyers.
Absolutely. And I would say to first-time home buyers, don't be afraid of, we call it the grandma house, that still has the wallpaper on the kitchen, in the kitchen, because behind that wallpaper, you can paint it if you pull it off the wall. And everybody's watching HGTV and YouTube videos. I've had clients tell me, oh, I can YouTube how to do that. Well, I would say no, but but a lot of people think that they can do it. And then they know people, oh, my grandfather can do that. My father-in-law can do that. Think about those things when you're buying a house for the first time. Go look at the grandma house, and maybe you can pull the wallpaper off the wall and make it the perfect kitchen.
Yeah. It's hard, especially for a first-time home buyer, when they enter that process. They have goggles on, because the whole concept of buying a home is so overwhelming that they might fixate on the color of paint, or on the yard, or what, that curb appeal or whatever, and predetermine that home before they walk in. And I think you made a very good point, certainly, in listening to that real estate professional and doing some of that work first. And doing these kind of conversations that we're going through today about what you can do before you even start looking for a home. But, well, let's listen. It's good. I've heard Bob say that, hey, man, rates are decent. They're decent based on time. And there is some homes out there that we can afford. You might have to reset your expectations a little bit. And we've heard Renee say that there is opportunity in the market, certainly. And we'll talk through what that means for us all. But maybe let's go right back. So I'm a first-time home buyer. I'm thinking about entering that process. Bob, from your perspective, what is my home buying budget? How do I kind of start that whole process, right? I'm paying rent, or I'm living at home, or I have a car payment. How do I go into that? what should I be thinking about and making a list of?
What I want to discuss with my borrower is let's look at the long-term picture. This is a long-term endeavor. Wonderful. It's a blessing to be able to do that. But I like to see what is your overall financial situation. We don't just look at little bits and pieces. We try to look at the total picture. So I'm going to look at what are you doing now for housing expense? Are you living at home? Are you renting? What are we doing about regular budgeted savings? Are we looking at a house payment that is more, maybe much more than what you're paying now? And we have to also look at the expected and unexpected costs that go with a home when you purchase it. As Renee talked about, some of it is cosmetic, but what are we looking at as far as health and safety, the electrical, the plumbing, the roof? So what I want to do is a lot of our borrowers will say, gosh, I've saved up $1,000. I think I'm ready for a home because there are down payment programs. I think it's wonderful. We will do programs that are in the best interest of the borrower every time. Not a question of whether we make money on it. As a not-for-profit credit union, we are here to serve our current and future members. So I think if an individual isn't asked the right questions and they're just giving information, many companies will pre-qualify you, pre-approve you, but without really diving into is now the right time. Many times I sit with a borrower and we're ready. Right now, between liquid savings, that would be checking savings, 401k, can we borrow against that? Do you have gifts from members of the family? We try to look at all resources. Are you selling any assets that we can verify to help? We want to make sure that where you are now, are you in a position right now to buy a home and be prepared for the expenses, as I said, expected or unexpected, things you want to do, things you have to do, or is this something we work together as a team? Renee, me, and the borrower. I take no greater joy in my borrower taking our team advice and calling at some point down the road. I had a young lady that I talked to 4 years ago, and she said, you told me I wasn't ready. You are correct. I've increased my savings. We discussed credit improvement strategies. I have much more stable income. She was just an outstanding candidate to buy a home. Did she have to wait 4 years? No, but she took our advice, wanted to be in an overqualified position so that the home ownership experience was just tremendous, all aspects.
That's an interesting point, Bob. If you think about home ownership, you always want to be in a position of leverage against a housing debt because it's not going anywhere. It's not like you can call your lender and say, "Hey, lower my payment this month. It's not going to be afforded for me." You want to be in a point where you have a saving. There's no more important savings than when you're a homeowner. Our parents called it a rainy day fund, but ultimately things break. I'm on my third home, Renee, and when you said removing wallpaper and doing the kind of the sweat equity, I had flashbacks to 1989, 1 year into my first home, living on basically a rolling cot that I moved from room to room when it wasn't working on that room because, you start, all I could afford was a fixer upper back then. And those were, thinking about it now, one of the most rewarding times in my life. I could see the before and after unfold right before my eyes and certainly lose track of this. And listen, first time homebuyers that are watching today, as you may feel daunted by some of the things that we're talking about, you need to prepare. This is no different than getting into shape, like going to the gym. We have to lift some weights to make progress here. And these are the things that you need to do. And there's no race to the finish line, whether it takes 4 weeks or 4 years, preparing yourself. And you'll know when you're ready, certainly for that next step. It's got nothing to do with maturity and all do with and asking and partnering with the professionals and getting there. So Bob, I think budgeting up front is super important. If you don't start with what are my debts today and my obligations and how much disposable income do I have and where are your savings, you're setting yourself up for failure, and certainly in a lot of ways. I guess really from that same perspective, Renee, as we move through this home buying process, let's say I've done my work with Bob. How do I determine the type of home and neighborhood that's best for me from a real estate perspective?
Well, one of course is your budget. That's the number one thing. I think it's your budget, because in Michigan, I won't name neighborhoods, but if you only have a certain amount of money, there's certainly some neighborhoods you cannot, if you only have $250,000, there's certainly neighborhoods you cannot afford to move into. So your budget is your budget. And so, first of all, we have to find the best. I ask my buyers, what area do you want to live in? We know here in the Detroit area, we divide everything by east side and west side, whether it's the suburbs of the east side or the suburbs of the west side or Detroit proper. I ask, what area? And that's the first thing, because and then I'll say, where do you work? Where do your kids go to school? If you don't have any kids, where do you work? Where do you want to be closest to? I've even had people say, I want to be close to my church. I had one girl last year. I need to be close to my church. So area and your budget, that's the second thing. You put those two together and you begin your search. I do it a lot of times, especially in Detroit. I'll do it by zip code. I call it a wish list, and I give it to my clients and I say, fill this out, because I'll have people call and say, yeah, I want to live in a nice neighborhood. Well, what does that mean? Because a nice neighborhood to me could be the Grosse Points. A nice neighborhood to somebody else could be another city. It's what your money can afford. So that's where we start.
Yeah. And I think so much, we touched on this earlier, but so much is driven by perception today. Like you mentioned, home improvement shows or HGTV. A lot of people see, oh, I need the granite, I need all those things, or I need to be in the perfect ideal neighborhood. I'm on my third house, and I bought what I could afford on the first one in the neighborhood I felt was the best connection for me. Did I have everything that I wanted? No, absolutely not. But we certainly made what it was as you kind of grow along. So I think that's super important. But I think more importantly, a first-time homebuyer needs realistic expectations about what they can afford. And I think that is a money conversation that you start first. And so I'm curious, do you divide east and west by telegraph or by woodward?
Woodward.
Yeah. Well, see, I'm a west sider. I do it by telegraph. So.
Oh, do you? I divide it by woodward, because usually if they say, okay, I want a house, but I don't want to live in Detroit. Okay, do you want to live in Farmington or do you want to live in St. Clair Shores? I mean, because that's a difference. Or here are two communities that are just alike in my mind. So if they say I want to live not in the city, but I want to live on the west side, I'll say Redford. If they say I want to live on the east side, but not in Detroit, Warren, Hazel Park, where? So, I mean, and then the west side, of course, you got Westland. So I need to find out, first of all, where you want to live. If you work at the airport, you certainly don't want to live Clinton Township.
Right, yeah.
Right, because you want to be closer. So location, and that's an old cliche, location, location, location. But it is important, because you may have the same amount of money. You may have the same $250, and you can go east with it. And I tell people, then taxes are cheaper. And then I have to send all that information to Bob, because he's always saying, well, before they can put an offer, I need to know what the taxes are. So there are certain counties that have less taxes than other counties. So
Yeah,
then I
certain
send Bob the
municipalities
whole
do, right?
listing. Yep. I said,
Yeah.
here, Bob, here's the listing. I said, now I'll tell the client, call Bob so he can tell you what your note's going to be, because I don't calculate. I don't do math. That's not my job. I open doors. So,
Yeah. What a great segue, Bob. All right. I'm a first time home buyer. I've decided, I've looked through my budget. I kind of know where I'm looking. How do I determine how much house I can afford? What's that process look like?
So I think you were spot on earlier. It is not only current debts, but projected future debts. I'll have borrowers with little or no debt at this point, but in our conversations, at some point, a car payment will come up. And a car payment is going to be much higher per month relative than a mortgage. When Dan started talking about payments, the big components I find are property taxes, homeowners insurance, which the borrower shops for. The cost per thousand on a mortgage, being conservative, is $7 a month. So to swing a payment $5,000 changes the payment a little bit, but not greatly. What I try to do, especially with my first time home buyers, is discuss the total component of the payment: principal, interest, taxes, insurance, and private mortgage insurance if needed. Property taxes, we have found, can be very uh, misleading, I want to say, not through anybody's intentional acts, but there was an act passed, I believe in 93, called the Headley Amendment that caps property taxes from rising by, I believe, 5% of the rate of inflation. So Renee and I will have the conversation. If the buyer is looking at a home that has been owned by the current homeowner for 15, 20, 30 years, property taxes are good now, but we have to look at what proposed property taxes are, and there are calculators we can do that. The city can provide that information, but I want to put my borrower into a position that I find most lenders don't discuss. What is the payment now? But if your property taxes were to go up, let's say $2,400, my borrowers and I will discuss it. It'll be a stretch, but I can carry the extra $200 a month. I need to advise that if that escrow shortage isn't paid because we're basing your payment on current taxes and insurance, when the taxes get set to market value, you could have an escrow shortage double the increase. That's something, I know that's overwhelming, but that's what we discuss. If you are barely able to make the payment now and you're not predictably savings on a regular basis, do we have reserves? Just like Dan said, I call it a rainy day fund. Checking, savings, 401k can often be a great reserve. We don't want to use that as a piggy bank, but it's a very valuable backup plan if we need it. So property taxes can go up. We've seen property taxes at closing go from 2,500 to 6,000 to 8,000 in some municipalities after closing. That can be devastating if the borrower is not aware, has not been educated, advised on that, because that can turn a wonderful home buying experience into a struggle for the buyer. So we try to look at the components. As Dan had said, current debts, proposed future debt. Are we looking at student loans, car payments, things that might come up? Are you going to finance improvements, repairs to the house? We want to make sure that we're not barely qualifying you on the house. A lot of my borrowers will say, well, I'm able to make my rent payment. And that's great that you're able to do that. We want to make sure all housing and other debts are paid on time. But if you're struggling to get by, barely making the rent payment, our debt to income of proposed total house payment and your current debts have to meet certain guidelines which are not just being able to make the rent payment. It is making sure that in many cases your total debt of current debt and house payment of all the components doesn't exceed 45% of your gross monthly wages, not take home, but gross monthly wages. And that's where we sit down and walk through that. Are we able to use base pay? Is it full time, part time? Are we able to use overtime, bonuses, any other components of your pay structure? But we try to take a huge overview process so that we're all working together as a team, that we're not getting you in to something you can barely afford now. And if anything happens moving forward, it will devastate you. We don't want to put you into that position if we can avoid that.
You packed a lot into that, Bob. I'm going to break down a couple of those things. So you want to cross the whole gamut of that, but if we can go back to escrows really quick. So just the taxes and then the insurance, and I want to be, I think, respectful to our first-time home buyers and understand that those are expenses that the only time you get to choose is when you're buying the home. You get to control what municipality you move in. Renee mentioned this earlier about how much the taxes are. Ultimately, the increase in that is already set up. So getting the education from your lender or your realtor about what is going to happen to your taxes is super important. It is the servicer of your mortgage. So in this case, we're talking about Michigan First Credit Union. When we close a loan, we generally keep the loan here and we send out your payments. We manage those expenses for you, but we do that on your behalf with your money. And the reason we do that is because you're putting maybe less than 20% down. And I do recommend, even if you're able to get 20% down as a first-time home buyer, that you let your servicer manage your escrow account, because it is overwhelming and you never want to be behind in your taxes. If we do it, we're going to pay them. Even if we don't have enough money, we're going to pay them. And then that's where Bob's alluding to the escrow account seeing dramatic payment increases, because not only are we short for the current bill, we have to make up for the new bill. The regulation around escrow accounts don't allow us to keep more than 2 months cushion in there. So those are all things that when you partner with a financial guide and a real estate guide through the transaction, you want to be educated on as you go through it. I hesitate when I see first-time home buyers only dealing with somebody online, because ultimately, and I'm not knocking any transactional experience, but it's really hard to glean that kind of feedback from a bot or a person that's only connected to you electronically. You want to be able to learn about all of the intricacies of home ownership, and that's a big one. 12 months into your mortgage, you do not want to get a bill that's went up $400 a month without you expecting it. And it happens to almost all of our first-time homebuyers today. So kudos to you, Bob, for trying to really make that a pinpoint for our homeowner, our new homeowners coming into that system. So Renee, I'm sure you've got some stories around how taxes have gone up too, but how do you handle that expectation with first-time homebuyers?
Well, I try a lot to give it to Bob because I'm not the mortgage professional, but I just want to say something else about Bob. He will meet with the buyer. I've known him to go to buyers' houses. I've known him to go to other credit unions closer to the buyer's jobs, so he can meet with you. He loves that face to face, and I think that's the important thing, because it's not just you, Dan. You talked about the online people. It's not just about, it's about a relationship and a team, because the two of us, myself and the lender, are not the only team members. There are other team members that we haven't even talked about. Well, you guys touched on insurance, but I just wanted to throw that in about Bob. He is great. He will come to you. I had a disabled buyer a few years ago. Bob went to his house.
Yeah, definitely.
So we both know, Bob,
Yeah.
he'll come to you. But so I tell them these taxes, I said, we got to talk to our lender because they have to calculate the taxes into your payment. A lot of times people don't know, well, that in your payment are your taxes and your insurance. So they need to, especially first time home buyers, they need to know this, and
Right.
they need to know if the taxes are going to go up. Or um, I was at a closing for a listing that I had last week, and the closer told the buyer, these taxes will be reassessed. So
Right.
that's something that they need to know. I've had buyers call me this year. Matter of fact, I even had a friend, she bought the house from her niece, was her real estate agent. She goes, my taxes just doubled. How can you help
Yeah.
me? And she wasn't a first time home buyer, but that
Mhm.
happens. And so people need to be aware that taxes fluctuate, they go up. And I had
Yeah.
somebody tell me taxes went down. I'm like, okay, where was this?
Yeah, right. Well, and there is a process to challenge. It's called a tax tribunal, and certainly as a
Absolutely.
first-time home buyer, I wouldn't want to go down that path. But you become a tax expert, especially if your bill doubles pretty quick. Like, all right, well, what goes into this? It is not. There's a little bit of math, obviously, certainly, but there is some science that you can affect in there, and certainly recent sales can help in that, and they will push the max on those. One other thing, Bob, you said in that process too was that DTI, that debt to income. And I want to just dwell on that just a little bit. That's probably a foreign concept to most people. They don't really think about when they go to the grocery store or they buy any kind of reoccurring debt. Grocery store was probably a bad example, but when they buy a car, they don't really worry so much about in relationship to their debt. They know how much their current house car payment was and doing the new one. But if you've never owned a home before, that debt to income ratio is super important. And man, I have seen a propensity over my time in this business, the over 30 years that I've been in this business, for that DTI to rise. It used to be you really wanted to stay in the high 30s. So 36%, 37% was considered a good ratio. So all of your debt, reoccurring debt, not your utilities or things like that, but your reoccurring debt as it relates to your gross income. So if you make $60,000 a year, that's 5,000 a month. 5,000 times 36%, that was the number that you wanted to be able to apply to all of your debt. We tend to go right to that max, and that's where we approve them. And understanding that number is important. Shopping in that number is dangerous because certainly, to your point, Renee, everyone requires you to call Bob and say, "What are the taxes? How are we going to recalculate this?" Because 1/10 of 1% could mean the difference between being approved and not approved for that loan. So, Bob, talk a little bit about your approach with a first-time home buyer and where you start that upper limit.
I start with asking the borrower, what kind of price range do you have? Many people have looked online, tried to get an idea, said, okay, let's start there. Let's back up and look at your current lifestyle, your spending habits, your saving habits. I like to call it homeowner mode. To get into a position to be as strong as possible, that means you might not go out as much. You might not make big ticket purchases right now. You might defer travel. Does that mean that has to be forever? Absolutely not. Once you get into a house and feel comfortable with unexpected expenses you didn't have, you can't call the landlord. You might have other utilities. You might have association dues, things like that you didn't experience before. Again, my borrowers will often come in and say, I can make my car payment, I can make the rent payment, and that's fine. Like Dan said, the old adage was 28 and 36. Conservatively, you wanted to have 1 week's paycheck cover a house payment. Those days are long gone. FHA, sure we'll discuss different loan programs. FHA, the Federal Housing Administration, will allow often in the high 40s, perhaps low 50s for debt to income. What that means is we take the total house payment, add on your other current minimum monthly payments, and that should not exceed hopefully 45%, and that's gross income. People will often come in and say, well, here's what I make. That's net. We are able to use gross, which gives you a lot more buying power, but we have to be careful. Many lenders treat a mortgage loan as a transaction. We treat it as a relationship. At the credit union, we take the overall financial position of education and putting you in a good position very seriously because we want to be your trusted advisor. So what I do is basically pull it down. I get your pay stubs, I get your W-2s, hopefully tax returns. A lot of our members will have a second job that may have great write-offs. Some loan programs, if the tax returns require being submitted, the second job can be deducted from overall income. That's a lot, but we want to try and uncover. There are things that may pop up that are unexpected and no one had control over. To uncover all of the aspects of income, what we can use, what we cannot. A lot of our borrowers have a second job that they've done a gig economy job for a month, 6 months. Good. Can we use that income? Many cases not if it's less than 2 years part-time, but could we budget based on your current pay and save any additional income that you get? So budgeting really, borrowers look at it at a very high level. We drill down, we try to get specific so the borrower understands where they are, what is comfortable. I tell my first-time home buyers, would you rather have a $100,000 house or a $200,000 house? $100,000 house, you move in, you feel comfortable with the payments, any repairs, and you're able to pay extra on the mortgage payment. So in a year, 2 years, you owe $50,000. The $200,000 house, you felt overwhelmed. Property taxes went up. Other expenses that were unforeseen come up. The $100,000 house, it's a very broad example, but you're able to sell. You have $50,000 now to apply to the next house. Like Dan said, he's on his third house. I've owned a number of homes. Each one, hopefully, you're building up equity so the home buyer experience moving forward is more comfortable for you and you're in a better position combining what you've realized from the sale of the current house and any savings, liquid, and 401k retirement.
Right. Yeah, and I think it's important. I'm going to shift gears a little bit here, but it's important to understand that home ownership's about a lot of things. The first and foremost is this is a place for you and your family or your future family to lay your head at night and be safe and reset. And certainly it's not about how you define your life. It is, yes, you want it to be safe and secure and nice, but just because maybe that first home I bought in Redford in 1988 was 900 square feet, 3-bedroom, 1.5 bath with an unfinished basement, for $46,000. Today, that home sells for $180,000. So understanding that or more, that today those investments grow better than any investment in the market. And I love this stat out there, and it has not changed in many years, that a homeowner, a first-time home buyer that decides to buy a home versus a renter who rents a home, after 5 years, the homeowner has 40 times the net worth. As much work and prep that we're talking about today isn't meant to be restrictive in any way. It is to prepare you to be the best, most successful homeowner there is today, to make an informed decision. Before you push a button and just get a loan to buy a house without any thought about, boy, what are going to happen to the taxes in a year? These are all things that we bring up, not to restrict anyone, but to make them be sustainable homeowners and understand we love putting first-time home buyers in homes. It is the best feeling. It is the passion why I know why I do it. Certainly we do it to make a living, but ultimately I don't think I work. This is truly one of the things. And I know Renee feels that way too. Ultimately, if there's a lot less stressful jobs to make a living at, but there is a big reward when you put somebody in their first home. So Renee, talk to me a little bit about, and I should have started here, but I think it's really dovetailing nicely. Why does somebody want to buy a home? I just touched on a number of reasons, but from your perspective as a realtor, when you meet with a first-time home buyer, what is those motivating factors?
So many, I was thinking as you were talking, there are many ages of first-time home buyers. Have a first-time home buyer now that Bob and I are working with. She's trying to buy a condo. Well, she's renting. Renting is the number one thing I think that people should look at. And here's something I hear all the time when somebody calls me about a rental. I say, why aren't you buying? Well, because I don't know if I want to stay in Michigan. This is what I say. Well, if you don't stay in Michigan, we can either sell it or it becomes an investment property for you. So when you buy a home, as you said, I didn't know how much, but after 5 years, you got 40% invested. So
more net worth, right?
Yeah, it's much, and you own it. You don't have a landlord. You're the landlord. Well, the bank's the landlord. But furthermore, and if you're in an apartment, I hear people saying, I can't stand my neighbors. Or they just, right. I have a friend in Tennessee and she lives upstairs and I keep trying to talk her into buying. And she just got a major promotion. I said, you really need to buy a house. And she goes, this is what she told me. She said, oh, my neighbors downstairs just moved out. I'm going to see if I can move downstairs. Why don't you buy a house?
Yeah.
Because she said, well, I don't want anybody over under me now, but somebody's going to move upstairs over you in your old apartment. And so I hear people complaining about, and she's telling me how the community is changing and all kind of things. When you live in an apartment or a rental property, I have a rental property right now that's up. The landlord ran the people away that he was renting to because he just barges in all kind of ways. So it's your home. You don't have to worry about the landlord coming. You don't have to worry about your neighbors. It's yours.
Yeah, it's stable. Certainly you talked about the investment part of it, even though, I'm a big believer that that there is investing in home ownership, like as a landlord, and then there is your home and the place where you provide for your family. I don't like when people treat it as an investment. I understand the concept. Certainly the lifestyle, there are many reasons why you would choose to buy a home. And the home ownership, there's a lot of debate about what home ownership rate is. It's not 100% because we know that there are people that are not at the place to be, they're transient, they're moving with their job, it's not 100%, but it's in the high 60s right now and it's climbing again. The rates are having an effect on that certainly and the inventory, but a lot of people think right around 65 to 70% is kind of the good spot. 30% of the population either aren't in a place to buy a home or really can't support that lifestyle. But, one of the other things I was thinking about when you were talking, Renee, is kind of this concept of rental homes. And certainly that is always an option, certainly from that regard. And while most people don't choose to do that because that comes with a whole set of other responsibilities, it is kind of a fallback, even in a market where maybe your appreciation of your home is on a downside one year. The long term, when you talk about long term in economics, it's over at least 30 years, over really since recording recent NMLS data. So like 60 years, the average increase in a home is 4% a year. So if you extrapolate that over a long time, obviously it makes a lot of sense. You heard me say I bought my first home in 88. If I look on Zillow today or on one of those sites today and get the automated value, it's $190,000, $200,000. I'm like, wow, that's really gone up. And that's that 4% long rate. There will be years where it's worth $30,000 more, and then the next year, maybe $20,000 less. Please don't be discouraged by that. When you talk about getting a mortgage, it really should be a 3 to 5 to 7 year minimum plan. And I think, Bob, you touched on it earlier, how long are you willing to be in this house? The cold hard fact is the average length of a mortgage these days is just shy of 7 years. In fact, it just crossed over the 6 year mark because of all the refinance booms we went through just recently. So most people are only in a mortgage 7 years anyhow before life changes for you. So that's one thing to consider. Well, we have talked a long time today, and I certainly know that we missed and probably could do a segment 2 to this one, and we might, but I definitely want to talk about some closing thoughts from each of you. So Renee, why don't we start with you? What are the things you would love our members to take away from the call today?
I would love to tell people that buying a house is not as scary as we think. For me, it's an adventure. We go out, we look at several homes, we pick one, and we may not get it, but if we get it, that's your dream home for now, because it's your first one. I took a buyer out for somebody else over the weekend, and they said to me, well, this is my first home. So it's not always your forever home, especially you just met, Dan, you just said most people only stay in the home 7 years. So it's not as scary as it sounds. For me, it's a lot of fun, and it could be fun for you, but come with realistic expectations. If you only have $100,000, no, you may not get everything you want, but there are workarounds. And if you have enough in your savings, or you can fix it up yourself, you could get the perfect home.
Right. And Renee, and I'm going to jump in real quick and get my closing thoughts. But if you think about the process of buying your first home, it can be very overwhelming. If you listen to this webinar today, you're like, I got to think about escrows. The important message I want our first-time home buyers to see is that it doesn't cost you anything but time to go through this process. Right. We don't charge for pre-approvals. We don't charge for Bob's services. Renee gets paid when the loan closes, when the property closes. Certainly there are commissions involved that is generally paid by the seller. So all we need is you and willing to do the work with us. And while that may take 4 weeks or 4 years, once you've done the work, it doesn't expire. You just have to stay on the plan and get through the process. And anyone in that regard, while I believe homeownership is a privilege, not a right, anyone can earn that privilege by just doing the work. And you mentioned the average age of a first-time home buyer. That's definitely gone up. We're definitely in the high 30s, depending on who you ask today. The mid to high 30s of the first-time home buyer. But we featured 5 grandmothers not that long ago that were first-time home buyers. Generational buyers, meaning teaching the next generation and then the following generation that, hey, you don't have to rent your whole life. You can actually buy a house. And those are generational wealth decisions that get made. And that's why we're here. And certainly thinking about that, it's not a, I'm going to get embarrassed. It could be a no, not yet. We make that decision together, but it's not yet. And this is, you do these things, you follow the prescription, and we'll get you there. So Bob, what are your closing thoughts?
Thank you. I just want everyone listening to know that we are here to be your trusted advisors. As a credit union, we are blessed. We're big enough. We're small enough. We'll help you any way we can put you in the best position possible to enjoy home ownership. We have down payment assistance program. We have grants as they become available. We are blessed to offer what I believe more programs to help the home buyer and anybody I know talking to my peers in the industry. As Dan said, we do this because we're here to act in your best interest, to make sure we all act as a team, to make it a wonderful experience. Many, many times my home buyers are ready right now. They've put themselves in a position. If not, we all walk hand in hand to make sure through the process we're here 7 days a week, pretty much 24 hours a day, to be available to you, to answer questions. Whatever question you have, Renee and I will answer those, not to judge, but to advise. And our home buyers, I think, feel much more comfortable and knowledgeable working with a trusted credit union and a team to walk through the process together.
Yeah, well said, Bob. In that vein, we are here to help you. So on the screen now is, if you want to take a screenshot of it, is our contact numbers, how to get to Michigan First. So for general information about this home buyer series, you can email info@michiganfirstmortgage.com. If you want to get more information, I would head you to our website at michiganfirst.com/mortgage. You can visit any of the 30 plus qualified loan officers we have there, but Bob is there and certainly is willing and able to help any of our members or soon to be members look for their journey in home ownership. You can call our call center at 800-664-3828 24/7, as Bob mentioned, and choose mortgage, and you will get to mortgage any time of the day. Bob's information is there if you want to reach out to him directly. For Renee or any follow-up questions for Renee, her phone number is there, 313-995-6547 or befavorable@gmail.com. So we are super excited you joined us today. So we also want to remind, I know we talked a lot about insurance and taxes today. Michigan First Insurance Agency has you covered. So please reach out to them directly. You can get at it through our call center for a referral or visit them directly at michiganfirst.com/insurance or 866-386-2216. And that's for all your insurance needs. So you want to get an estimate on what a house will cost you, give them a call. They'll definitely work that out for you if you have an address. So that is the conclusion of our call today. So thank you for joining us. Hopefully you're enjoying a great summer, and we look forward to seeing you on our next seminar. Have a wonderful day. Take care.